The era of the cleanest dirty shirt is officially over. This morning, the global financial architecture didn't just crack, it shattered. While the mainstream media is busy distracting you with political theater, the U.S. central bank is facing a direct threat to its very existence. We are witnessing an unprecedented convergence of internal institutional collapse and external geopolitical rebellion. The U.S. dollar is no longer a shield, it is a weight pulling down every asset connected to it. Gold has just exploded past $4,600 an ounce, and if you're still holding 100% of your wealth in USD-denominated assets, you are standing on a bridge that has already been wired with explosives. Let's look at the fire burning inside the Federal Reserve. On January 11, 2026, the Department of Justice issued a series of subpoenas that changed everything. For the first time in history, a sitting Federal Reserve Chair Jerome Powell is under criminal investigation. The charge: alleged institutional coordination that has compromised the Fed's independence. Markets hate uncertainty, but they fear a loss of institutional integrity even more. The moment the market realized the Fed was no longer an independent pilot, but a political passenger, the Fed put died. Gold reacted instantly, surging 3% in a single trading session, entering a price discovery phase where the old rules of resistance no longer apply. Why are we saying USD assets are done? Because the world is voting with its feet. For the first time since 1996, global central banks now hold more gold in their reserves than U.S. Treasuries. Think about the significance of that. The primary collateral of the global banking system is being dumped in favor of a yellow metal that pays no interest. Why? Because you can't sanction gold in a vault, and you can't print it into worthlessness. As the U.S. debt hits 125% of GDP, a level unprecedented in peacetime, the world has realized that the interest payments alone are now a systemic risk. Foreigners are no longer funding the American lifestyle. The auction rooms for U.S. Treasuries are becoming ghost towns, and when the buyers disappear, the dollar collapses. While the Fed is fighting for its life in Washington, the BRICS nations are moving for the kill. The 2026 summit in India has just moved closer to finalizing the unit, a blockchain-based payment system designed to bypass the SWIFT network entirely. This isn't just another alternative currency, it's a digital bypass of the American banking monopoly. Russia, China, and now a pivoting Latin America are building a wall around the dollar. The petrodollar architecture that Henry Kissinger built in 1973 is being dismantled brick by brick. When oil and gas are no longer exclusively priced in dollars, the exorbitant privilege of the United States vanishes overnight. The dollars currently held overseas will start flooding back home, creating a hyperinflationary feedback loop that no interest rate hike can stop. Now, look at the charts. Gold at $4,600 is just the beginning. JP Morgan and Goldman Sachs are already scrambling to revise their targets to $5,000 and $6,000 for the end of 2026. But the real story is the beta expansion in silver. While gold gained 3%, silver exploded by 8%, testing levels above $84. The industrial monetary dual character of silver is creating a vacuum. The U.S. Mint has already signaled an 8-week delay on sales. Why? Because they literally ran out of metal. The rule change is here. The government is prioritizing silver for defense and AI, leaving the retail investor locked out of the market. This is what a physical shortage looks like in real time. The Trump administration's Liberation Day tariffs are the final nail in the coffin. A 10% across-the-board import tax is expected to push inflation up by another 1.5% this year. We are entering a K-shaped stagflationary trap where growth slows down while costs explode. The Federal Reserve is caught in a high-wire act. They need to cut rates to save the jobs market, but they need to keep them high to fight the tariff-induced inflation and save the dollar. They can't do both. The moment they choose the economy over the currency, the dollar will drop another 10% to 15% against a basket of global currencies. Your purchasing power is being liquidated to save a failing system. The U.S. central bank is being threatened from within and without. The dollar is no longer a safe haven, it is the epicenter of the crisis. USD assets are facing a structural decline that could last a decade. If you are waiting for a sign, the U.S. Mint halting sales and gold hitting for $1,600 is the sign. The exit door is narrowing every single day. The one big beautiful bill and the debt limit fight on January 2nd have proven that there is no political will to stop the spending. You have two choices: stay on the sinking ship of fiat currency or move into the lifeboats of hard assets. The $5,000 gold endgame is no longer a prediction. It is a mathematical certainty. Protect your family. Secure your wealth in physical form. Subscribe to Survival Economics to stay ahead of the next Tier 1 leak. The reset is here. Don't be the last one holding the paper. I'll see you in the next report.